What's going on, everyone? About 67% of the S&P 500 closed down in the red today, and the market is starting to get pretty juicy, Tom, as volatility is heating up big time. A whole bunch of stocks are moving in ways that they just haven't in a long time, and this volatility isn't going to slow down anytime soon as we have a lot more big earnings on the way. We have a handful of pretty exciting things developing in the market right now, and as we all know, we have a crucial election coming up in just a couple months, so we're pretty pumped about the market right now. I hope you guys are as well, because when you see increases in volatility like we're seeing now, not only do you have crazier moves to the downside, but you also have crazier moves to the upside, and it's a great thing for short-term trading. So with that being said, Tom, let's jump right into it.
Yeah, the VIX actually popped up a lot today, and SPY closed down 2.27%. That was one of the biggest drops that we've seen in a long time on the SPY. And Mike, I just have to go back to the heat map for a second and just kind of admire the amount of red that we actually witnessed today. This is a lot, and we know what this is mainly stemming from, right? Tesla and Google's earnings. It's putting a bad taste in traders' mouths right now as these stocks are falling off a little bit. And I know last night and after hours, Google was popping up and then actually ended up coming down today, closing down over 5%. Tesla's down 12%. I've seen some pretty negative articles, Mike, whenever I go and I look at Tesla. CNBC's kind of, pushing some fear here, so to say, with Tesla falling as much as they are, and this caused the big streak on SPY to become broken. 356-day streak we were at, the biggest streak since 2007, has been broken on the SPY with that pullback today. I can't believe we saw a close under 2%.
I know, Tom, and we've been following this streak for a long time, and for those of you who haven't, basically the market was on such a strong uptrend that it went 356 days without a 2% pullback or more. But as of today, it starts back at zero. So it goes to show that the market is definitely heating up and changing quite a bit. And just like you said, Tom, Tesla and Google and just the, I guess you could say, cascading effect of these other big tech stocks is what really just made the market drill lower today. Whenever you see big moves in either direction, it tends to bring upon even more of that action. So basically when you see a big drop with big tech stocks, that causes a lot of fear out there to spread across the market, but it also encourages a lot of short selling, therefore making the drop even bigger and stronger. So that's pretty crazy to see. And as we look at, let's say, the market over the past couple of weeks or so, yes, it has been pretty volatile, but to be realistic, Tom, the market is only down a little bit over 4% from its all-time high. So if you think this recent drop has been bad, you don't know what's coming. But when we look at historical data, we can see that basically this sort of volatility is not something to be feared. It's something that happens all the time. And when you go and look at data all the way back to 1928, you can see that on average, a 3% dip happens around 7 times per year, and a 5% dip happens about 3.5 times per year, and so on and so forth with the other data. But this volatility is pretty exciting to see.
Man, Mike, a 10% correction happens 1.1 times per year, so over 1, right? And who knows, maybe this will end up being the big 10% correction for the year overall. But, it's very interesting to see these numbers and to see that, we've been that long without a 2% drop, right? So even like last year, we were like well above the averages most of the time. So very interesting there, Mike. I think that's an interesting stat to look at whenever we look at pullbacks in general with the SPY. And let's say that we go back to the pullback from March and April of this year. There was a pretty good pullback there. It ended up being a pullback of around 6%. So, it didn't quite get to that 10% mark, but definitely hit the first two there.
No doubt. And another thing that we've been hitting on quite a bit over the past month or so is the July seasonality. So basically, the first 2 weeks of July are actually the strongest 2 week period of the entire year. And the market respected that historical tendency pretty well. But we could see once we get to like the 24th to like the 25th day of the month, that's when the market tends to like bottom out a little bit. But what's kind of interesting is that this July, the market actually rose by like a lot in the first 2 weeks of July. Looking at the data more specifically, we can see the market increase by almost 4% during that time, which is great to see. But as we look at the seasonality, while we are heading into a stronger part of the month, which is like the last week or so, it's not as strong as like the first 2 weeks are. And then another thing to keep in mind is because the market has already outperformed its historical seasonality so much, we might even see a little bit of a mean reversion effect here where the market's overextendedness, so to say, can kind of outweigh some of the bullishness that we historically do see come in towards the end of the month. So basically what I'm trying to say is that even though this last week or so is normally pretty strong, if the market keeps drilling like it is, I don't think seasonality data is going to save the market.
Yeah, and the market's done so well this year that, a pullback overall on the year is probably in the cards, right? Like if we're looking at historical data. So I definitely feel what you're saying overall, Mike. And, whenever I look at the SPY here, I noticed today that the low of day was actually under where we started July. I think that's going to blow a lot of traders' minds how quickly we saw that drop and pullback there on the SPY there overall. But, today it actually started to bottom out around like a huge support around 540, which will be pretty significant for tomorrow. If the SPY can break back under 540 and continue drilling, we might see some more selling pressure come in. That's going to be a very big area to watch. And I know a lot of these tech stocks started flushing under their short-term supports today. So, there's going to be a lot of eyes on a lot of upcoming levels with, Nvidia, Tesla, and these larger tech stocks.
Sounds good and great points there. But Tom, we have to circle back to CrowdStrike, the company that launched an update last week that had a worldwide effect. And not in a good way either. The largest IT outage in the history of the world, but they actually are trying to make right with their partners where they are now offering a $10 Uber Eats gift card to say sorry for the outage. And Tom, this is almost enough to cover the delivery fee.
I know, right? Like, I am so surprised here, Mike, that they're even offering this as an apology, right? And we have to keep in mind that with what happened with CrowdStrike, businesses ended up being shut down essentially for multiple days. Some did. Now, multiple businesses were affected in different ways, right? Some might have been back up and going quick. Some might have had their infrastructure down for quite a while. But nonetheless, I thought this was very interesting. They said, and for that, we send our heartfelt thanks and apologies for the inconvenience. To express our gratitude, your next cup of coffee or late night snack is on us. And Mike, for any business owners out there, we all know, like, hey, if you're shut down for business on a day, like, how much money might that cost you? $10,000, $20,000, $50,000? Like, if you're a bigger business, right? Ugh, that's pretty bad to get a $10 gift card off of that.
And then when you also think about that, it affected companies as big as like national airlines and hospitals and everything else. Like, imagine you're one of like the IT like managers at one of these giant companies and you've been working like 18 to 20 hour days trying to fix this issue that was unnecessarily caused. And you just get an email like, oh, here's a $10 Uber Eats gift card. I'd be like, are you kidding me? But either way, definitely wanted to showcase that because, CrowdStrike surely isn't getting too much love either.
Yeah, they're not. Their stock was down 3.99% today. And just to like give some context with CrowdStrike here, they reported earnings a few weeks ago. And off of those earnings from the low there, they ended up running up around 28, almost hitting 30%. Well, they did hit 30% right at the high there, and now they dipped down. I mean, Mike, this pullback was so massive. Now they're falling down 35%. So this situation has definitely been a bad one for CrowdStrike. And whenever you talk about like a daily chart and like a turnaround on a stock, this is not what you want to see as a shareholder. This is some of the, it's like a falling knife, so to say, like in the stock trading world.
Yeah, and not too many people like to catch falling knives either. So keep a close eye on this one going forward. But Tom, you mentioned earnings a little bit. So we are in a pretty crucial earnings week. So what is on the schedule?
Yeah, tonight we saw Chipotle report. They're actually popping up in after hours pretty well, which is nice. I saw Ford report. They weren't doing so hot, but nonetheless, there were a couple others like LVS and NEM, which also reported. Tomorrow morning, we're going to see American Airlines report, which will be pretty big. The airlines have had some pretty interesting reports lately. In after hours tomorrow, Texas Roadhouse, Dexcom, a couple others. It's not like there's there's nothing like Tesla or Google reporting tomorrow, right? But, American Airlines could be pretty interesting with some of that movement in the morning, and even RTX on the defense side of things as well.
All right, sounds good. And then looking at the economic schedule, tomorrow isn't set for anything too crazy, but there is durable goods and GDP data set to release. So keep that in mind. But I would say earnings and just the overall price action is much more important. But as we look at the market as a whole right now, Tom, clearly there's a lot of selling pressure coming into play. What would you say are the key levels in both directions for tomorrow?
Yeah, so the SPY ended up really bouncing below pretty key supports today. Yesterday we talked about quite a few of them. 548 was a pretty big one in the short term. It was like the low from last week on Friday. We ended up flushing below that today. Now we're all the way down around 540. So I talked about 540 a little bit earlier, so I'll be watching that very closely. It's a good whole dollar level, and we did see a good bounce there right around the market close. With how much we flushed today, don't be surprised to see like a bit of a pullback back up. And if that happens, I'll be looking for resistance around 544, 545.50, and then 548 to the upside. To the downside, if we do break below 540 and we keep flushing, I'll be watching for 538, 536.90 to 537, and then 535 to the downside. But I will say this, Mike, it's a little bit hard to see on the chart with SPY because you have to go back so far now to kind of see the big support levels coming up here. And I'm going to circle some of the areas where there was the most price action in the past, and that's really what you want to watch is those little ranges where the price action started to consolidate in the past there.
All right, sounds good. Well, let's get right into the good stuff then, which are some setups and predictions. A stock I'm watching very closely right now is Netflix, and it is to the downside. This stock reported earnings last week, and it tried to run up, but it got rejected multiple times. We can see just by looking at the chart, it keeps trying to pop up, but the selling pressure just keeps hammering it back down. So looking at Netflix, basically the combination of this increased selling pressure as well as just the market as a whole dropping, in my opinion, makes this setup a good one to play to the downside. It has some recent support around like the $630 area, but basically with Netflix, it's one of those stocks where like once it starts to move, it tends to move in a pretty strong and consistent way. So I'm going to have this one close on watch to the downside in the short term. As always, the more pressure it puts on its lows, the better and stronger the setup becomes.
Yeah, I like this one quite a bit to the downside. The support will be crucial, and, it didn't have very much strength with earnings, and with big tech starting to sell down, I would think Netflix would be one that could definitely follow, some of these larger players to the downside here, so I'll definitely have it on the radar. I love those types of support plays, like you mentioned, at 630. With my first play, I'm looking at a pretty rough stock in the short term, and that is Snapchat. It ended up falling down 5.2% today, and if we go to a daily chart of Snapchat, and we look at it over the past couple of years, it has been brutal. But if we zoom in a little bit, we look at the daily chart, it's also getting brutal in the short term. And I'm looking for this gap to start to fill here in between 1350 and pretty much 1250. So I'm looking for Snapchat to continue down in the short term. If they end up breaking under the low of day today, which is right around $13.50, I will keep watching it to the downside. So I just want to see nice consistent pressure on that low of day, and I want to keep seeing that good flush on the daily chart for Snap. But overall, Mike, I mean, today there was so much selling pressure. If you're a bull player out there, you're not going to like a lot of these plays.
But as always, it's important to adapt. So if the market gets super bullish tomorrow, then don't get stuck in that bearish mindset. And we do have some bullish plays as the video goes on as well. But either way, another stock I'm watching pretty closely right now is TLT, and it's to the downside. And while this is to the downside, it's a little bit different than your average setup, because for those of you who don't know, TLT follows interest rates, and the lower TLT goes, the higher interest rates are going. So basically, looking at TLT to the downside is a way on playing interest rates to the upside. But what we've seen over the past couple trading days with TLT is a big increase in intraday selling pressure, and today was a decently sized red day, especially for TLT. And while this ETF surely isn't as volatile as a stock like Tesla or Google or Nvidia or anything else like that out there, the options on TLT do move quite a bit, and they're also pretty liquid. So like, for example, while TLT only fell 1% today, a lot of its options that expired this week increased by anywhere from 200 to 300% just today. And actually, one of them increased by 500%. So the options move in a pretty good way, to say the least. But either way, I really like the momentum and the price action that TLT has been having to the downside. So I definitely have a bearish bias on it in the short term going forward.
Yeah, and if you're an intraday trader out there, I know a lot of people might have a lot of hard feelings on yields and stuff like that, but whenever you start to see selling pressure like this with TLT intraday, you can really have some great intraday, day trading opportunities with the options here. So I'm glad you mentioned the options, Mike, because sometimes these stocks that, you see they only move like 1%, sometimes 1% is a huge move because their average percent drop is only 0.64%. So, it's almost like doubling the average there. But with my next play, I'm looking at Bookmap and I'm looking at Nvidia at the same time. So I bet a lot of people out there are like, oh my gosh, Nvidia just flushed under its little support it was trying to hold around 116.50 to 118. What's going on? What levels are coming up, right? And trust me, I feel you. I'm looking at Nvidia on the daily and like hourly charts, and I'm like, wow, Mike. And, we're seeing these huge supports give out. How much lower can we get here in the short term? So I'm looking at a few levels coming up on the Bookmap. 110 is going to be huge coming up. You can see all the players that have been stacked there all day today. There was almost 1 million shares at that level, like around 860,000 right before the market closed. So as we start to flush, and, let's say that tomorrow we see a lot of good selling pressure at market open, watch for 110 to the downside. That might be a good target if you're looking for more of a flush with Nvidia. But nonetheless, I'm just continuing to watch these tech stocks down. Nvidia is one that we've been seeing a big difference in the price action with, Mike. And you know what I really like about Nvidia is that it's been one that has continually been showing us lately that the price action has been shifting. Whereas, like, if we go back and we look at SPY, it was hitting all-time highs like a week ago. But Nvidia during that time was actually posting lower highs, right? And then we saw a pretty solid rejection. Now support's giving out. So, I'm just looking at some big levels in the short term, like 110 for tomorrow. But, as we always say, it's important to be adaptable. If we wake up tomorrow and stocks are recovering up like crazy in pre-market, you might have to adjust your strategy a little bit.
No doubt, and I'm very glad you brought that up, because being adaptable, especially in this market, is hands down the best thing that anyone can do, and it's especially important this year due to the election and how the world is just kind of getting crazy, and there's just a lot going on in multiple different ways, shapes, and forms. So it's like being willing to adapt and change your thesis and bias is something that a lot of traders don't do, but it's something something that surely everyone should be doing. And those who do adapt and remain flexible are the traders that end up not only just surviving, but prospering in any market environment. So definitely keep that in mind. But Tom, it's now about that time for today's momentum plays. And with the first one, we have end phase. And Tom, I don't know what's going on with this one, but it actually was green today. I can't believe it.
I know, right? They were one of the good earnings reports from yesterday, and I was very surprised to see them moving up today. And, the cool thing about Enphase is that they have a weak correlation to the market. So this could maybe be one of those stocks that we see like a rotation into as some of the tech stocks sell off. But if we see a good break above that high of day today around 120, keep watching Enphase to the upside.
All right. With the next one, we have Meta to the downside.
Yeah, poor Meta today. They were down 5.6%, helping this big sell-off with the market. If they break under 460, then watch Meta down.
All right, and then with the last one, we have Amazon for both directions.
Yeah, so Amazon's been pretty wild in the short term. It was down 3% today, though, and the thing that I really like about Amazon in the short term is, with both directions, we might see a bit of a pullback tomorrow morning, right? With how massive the sell-off was today, maybe come up and test some resistances. So, like, if we see a pullback back above 183, then watch Amazon to the upside. But if it ends up breaking a key support here, right at 180 even, then keep watching it down. And I will say, I do have a downside bias here.
All right, so we have the downside level for Amazon. We have the upside level as well. Don't forget about the downside level with Meta and the upside level with Enphase. Either way, these three stocks are on watch for potential day trades tomorrow. If and only if they break through the levels Tom listed. We want to see breakthroughs and then continuations in the levels listed. If these stocks do not break the levels listed, then do not force the setups. We're looking for strong, powerful, consistent price action. So those are today's momentum plays. So let's jump right into today's $6.8 million big money trade. And we are looking at ticker symbol GOOG. Google again. So basically the big money today is betting bearish on Google, and they bought the 180 strike put options that expire on August 16th of 2024. This is a pretty big size trade. There is the options are in the money, but then the expiration is also somewhat soon. So this is definitely a pretty bold trade here. I also saw that this trade filled at almost the exact low of the day for these options. So that is also convincing to see. But, when we look at Google right now, there's definitely a lot of bearish price action and momentum. The market itself is drilling quite a bit. So there's definitely opportunity with a play like this one. But at the same time, it's risky. These options expire relatively soon. And while they are in the money, and while that is great to see, volatility is increasing. So it's just going to make for bigger moves in both directions. But I definitely thought this trade was very interesting, and I'm very excited to see how it does.
Yeah, me too, Mike. I will say, though, I have some beef with Google after what happened last night. How it popped up in after hours, and then, we record the video, and then we get done recording, and guess what? It comes tanking down. I was laughing. I was like, wow, the YouTube headlines ended up, that YouTube ad revenue ended up getting them a little bit there. But, yeah, it had me laughing. But I do like the big money play quite a bit, though. The 180 puts are in the money, which I really like there. Some people might complain about the price of the options, but I don't think that they're really that overpriced for what Google is doing right now. And it is a short-term play, so keep that in mind. I really like that it's in the money. And Mike, it's been a while since we've had a big money play that was number one this short term, but number two, $6.8 million. That's a pretty huge one. And let's get into some of the order flow here. Why would you think that someone would buy this? Do you think that they might be hedging some Google shares? Do you think they're just trying to maybe catch some downside movement? What do you think here?
Yeah, it's definitely possible for them to be hedging shares, but by the way in which it was filled, again, it was almost at the exact low of the day for these options, so the timing was just precise. It definitely makes me think that it's more of an independent, more strategic trade, because if it was a hedge play, the big money normally prioritizes the hedge rather than, getting a perfectly timed fill. So I just think there's a a whale out there who definitely sees Google continuing lower, and they're looking to buy an option that has like good value to it as it's already in the money, but they also want that like extreme, I guess you could say that like exponential potential given the short-term expiration. But it is definitely a big money trade that stands out on multiple different, on you could say multiple different fronts.
Yeah, that does make sense, Mike. And, it's good. It's a nice one, $6.8 million. We don't always see big money plays with that type of number and with how much downside selling pressure that we're seeing out of Google. And it's not just Google either. It's like market-wide selling pressure. And we can go to the VIX and just see how much it's been popping off in the short term as well. VIX started breaking back out above its highs of last week and actually broke all the way up to 1850 almost today. So, here's another chart of the VIX, continuing its nice run to the upside, coming up off that support that we were talking about for what felt like months down there. It was only a couple months, but it felt a lot longer than that.
You know it. But as we look at the market right now, the craziness is here and it's not going away anytime soon. So I really do hope you guys are as excited as we are, because craziness makes for bigger moves in both directions. And there are a whole bunch of opportunities that come along with that. When you have a market that's just slowly chopping around and not doing anything, those markets just kind of suck, where it's just like it's boring and there aren't as many opportunities. So I'm super excited. If you guys are new to the channel, consider demolishing that subscribe button to get our videos recommended to you more often. In every single video, we cover charts that you probably wouldn't have otherwise have seen. It takes us hours to do all of the research to cover everything that you need to know about the market. We cover $1 million big money trades. We, of course, show the book map all the time, give SPY levels, and basically show you everything you need to know in the market. So consider joining the Stocked Up crew by demolishing that subscribe button. But besides that, thank you all so much for watching. And before we close out, we want to give a giant shout out to today's member of the day, Ordelin, in the Stocked Up Discord. They had a great post today where they did pretty well with some Tesla put options. So great work there, and keep on rolling. Besides that, thank you all so much for watching, and let's crush it in the market tomorrow.